Hey guys, this is Rob Mitchell. Thanks for coming in today. Can everybody hear me all right? Awesome, awesome. Like I said, guys, thanks for coming in today for the webinar that Steve's doing today, Insider Secrets of Successful ES Day Traders. Many of you know, or if you don't, I'll let you know anyways. Steve runs our stock index trading room. And I just love to come to his webinars because he always has new things to show. And we have been doing these things now in our trading rooms for, we're coming into our 6th year this year. And usually the principles that we're showing are things that we've done since the very beginning. So we share with you in these webinars things that are maybe refinements of the things that we've been doing forever, and or that we have evolved over the year from those original methods. I met Steve, maybe it's about 4 years ago now, and when Steve first came into our trading room, and he began doing research in a way that was just utterly staggering. He was tireless in the way that he went about researching and discovering for himself the way he could use the tools and things that we do. So he always has special insights about the movements of the market and the way these concepts that we use work for trading. Yeah, and so I won't delay any further. Steve, I'll hand it over to you.
Sound check. Thanks, Rob. Thank you. Somebody give me a thumbs up, because I don't want to be talking to myself. Hey, Darren, how are you, sir? Thanks, Rob. First off, thanks everybody for being here. 4:30 Wednesday afternoon, middle of the week. I'm going to be very respectful of your time. I will take exactly as much time as we need to cover the concepts and no more. We've got to thank Rob. We can't do this without thanking Rob. His tools are brilliant. The longer I'm around the tools and Rob and his caring and giving essence and person of who he is, the more honored and humbled I am to be representing, yes we do, Brandon, to be representing Rob Mitchell. If you're not familiar with Rob, he, a couple of things, he's a World Cup trading champion and was the largest ES trader in the world for a period of time. And I could give you 20 more and I won't. That should be enough. So, first off, I'm not a public speaker. I'm not a professional speaker. If you're looking for somebody to impress you with all kinds of fancy jargon and whatever, that webinar is being done by somebody else at another time in another place. That's not what this is about. We're going to share a couple of ideas with you. One we've used in a room for a long time, and I thought it was basic common knowledge, and it turns out it's not. I've talked to people that have traded successfully for 15 or 20 years. And when I talk about this concept, they're staggered, they're floored. And so I thought it was time to share it with people. And so here's the way this works. I'm going to go ahead and get our next slide up. So we're going to make this legal. Here's how this is going to work. I'm going to read to you for about, I hope, 4 minutes or so. And I'm going to show you some slides. We're going to talk about some stuff. We're going to look at a new signal, and then we'll wrap it up. And that just is the way we do these. The initial part of the presentation today may be Ned and a first grade reader for some of you, and that's okay. It's not for everyone. So if I start talking about a very basic concept and you go, wow, who doesn't know that? Trust me, a lot of people don't, and they need to hear it. So that part's not for you, but trust me, you want to stick around for what we have to share. You want to be here through the entire presentation. So here I am. I'm not going to tell you a lot about me. I do like to share this story. I'm a retired golf professional. Didn't play very well professionally. Didn't scare anybody, but I taught at a very high level for a long period of time. Trading and competitive golf are pretty much exactly the same from an emotional and psychological standpoint. But here's why I do this. I remember one time we were doing this and someone said, "Hey, Terrence, it's so good to see you, sir." Someone said, "We don't want to hear about you. Get to the good stuff or whatever." And I thought, you know, shame on you that you would listen to someone give you information about your future and you wouldn't qualify that person as being legitimate. So that's the only reason that Rob or I either one talk about ourselves, not to bring light on ourselves. It's just simply, I would ask you never, ever to take information or advice from someone that you don't know 100% is legitimate. Okay, so let's go. Buckle your seatbelts. There's not a lot of detail that you'll need to remember in the first few slides, but it's important for me to set it up. So here we go. Not all markets are created equal. Knowing the purpose of an individual market will prove to be invaluable over time to the informed trader. What are the major players doing in the market? Why are they here? What are they looking for? And knowing that always gives us an advantage over the uninformed trader or the traders unwilling to accept the real truth about the why of price movement. Now, time doesn't allow me to discuss this idea, and it really doesn't need to be. I'm going to talk about two very broad, basic types of future markets. And they're as different as night and day, or we have some friends from the UK here, chalk to cheese. Financial markets, the ES, other stocks, bonds, et cetera, are designed solely as insurance to protect an underlying asset against fluctuating, falling prices. If I have a $100 million stock portfolio and I want to mitigate the damage done by sell-offs, I will short something. It could be one of the futures markets. It could be another concept, but I'm going to insure part of that. And that's the purpose of stock index funds is first and foremost for the large accounts to protect falling prices. Commodities, we're hedging an underlying asset against fluctuating falling prices, just as the ES. But then the other purpose of a real commodity is locking in an order to deliver or take delivery of the product. Now, here's how that works. I live about 20 minutes from McKee Foods, and that didn't mean anything to anybody except people around Chattanooga. But maybe you've heard of Little Debbie's. And largest snack cake maker in the world, McKee Foods. Now, he uses a lot of commodities, but he uses tons and tons and tons of sugar. So about 6 or 7 months ago, sugar got down a little over 9 cents a pound, spot market price, and that's about production costs. So they weren't gonna make any more. And Mr. McKee went in and locked in futures deliveries for sugar in order to take delivery. So by default, a certain number of contracts will expire open. Okay, this causes price action to be different than a market such as the ES, where contracts will never expire open. So we can't trade these two markets the same. See, here's one of the key secrets. No one's ever purchased an ES futures contract with the intent of taking delivery of 500 stocks represented by the fund. It's always going to be traded out, always. We're not going to talk about the arbitrage factor today. We're going to talk about a real basic concept, but there is arbitrage, and that does give us some more tremendous opportunities in the ES. But here's the key to the kingdom. Here's the crux of what we're going to talk about today. In the article that Rob was kind enough to let me share credit with him in Traders World Magazine, we talked about ultimate trend identification system. And one of the, I've started with a line, the ES has very few vertical days, and response about that was, what the heck is a vertical day? Or they knew what a vertical day was, and they said, I don't believe that. Now I'm going to prove to you about we don't have a lot of vertical days in the ES, and that in and of itself gives us opportunities that no other market can afford us over time. Okay, a vertical day is one in the market. It moves in a direction fairly consistent all day and stays there. Gold is a perfect example. Gold tends to move off the open, goes up, goes down, does whatever it's going to do, and just sits there. Some other commodities do the same. The ES, however, does not do that because it's going to be traded out. It's always used to balance or hedge underlying stocks. So because of that, there's always an ebb and flow, give and take, cycling all day long, which gives us a tremendous advantage. Now, all markets cycle sometimes, and occasionally, you know, we'll move just straight down all day or straight up all day. Pretty unusual, though. About 85% of the time, we don't move vertical. And so people say, okay, prove it. Glad you asked. I'll be happy to. Now, the folks in the room that trade with us understand what they're laughing right now. They're going, oh, yeah, no, this is great stuff. For the year 2020, the ES is traded away from and then returned to either test or overtake the open, drumroll please, 84% of the time. I'm going to show you what that means, looks like in a minute. But 85% of the time, we can get a favorable directional bias just knowing this one fact. This number was higher, but we missed a couple of days. Monday we missed, and we missed one day last week. So this number went from like 86.8 to 84.3 or something. So I went ahead and changed that this morning. Now this is after a measurable move in one direction, and people ask, well, what does that mean? I don't know. 7 points, 20 points, but it's just, there is no qualifying number. I've looked at every possible scenario and I can't find one. I can't find a hard and fast rule, but most people over time are smart enough, if they know what they're looking for, to go, you know, I think I know what this is going to do. And we can even tell you in the room, and we do this daily, we can even tell you what price action is going to be like when it gets to that situation. So this is an unbelievable advantage in our trading. So what does that look like? Here's today's chart. Let me do this. Let me take this off if you don't mind. So here's the open at 9, actually, you know, opens over in here, it prints at 9:31 here, but this is the open area, and the value of the open looks like 72.75. So it's chopping around in here as it normally does. Now this red line up here, I'll bring your attention to, is something that I place in the room, and our members will tell you red lines are spectacular. Yellow lines we'll place are key chart points that the market respects. Red lines are hard to get across. Okay, and I say that for a reason, because in a minute it's going to come into play. Okay, so here we go, chopping around, open, 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 can't tell anything. So we head up. Okay, now in the room, I mentioned, we have this type 2 here, but in the room I mentioned, I think the term I used, aggressive traders should pay close attention to this reversal bar down and look for it to head back to the open. Now the open is this purple line on our chart. By the way, before I forget, we have this indicator software that plots all of these key levels that we're going to talk about is free for our members. In fact, it's on the members homepage. They can download it and set it up. We help them set it up if they have issues. But this is a brilliant piece of software indication in our members. It's free for them. Okay, so anyway, so we're talking about, hey, the red line's probably going to hold. We know that the market moves away from it and tests the open. So this entry, this was about a 7.5 point trade right off the bat. And lo and behold, we move away from and come back and return to the open. See that? Isn't that cool? Here's a crude chart, not a crude, kind of a little bit crude, real simple. That was the wrong button. So here's today's price action, and what was represented there, a period, this is a 10-minute chart so we can see 3 bars, a period, market opened, went up, came back down, tested the open, traded down, came back up, tested the open, tested the open, tested the open, tested the open. Now, it normally doesn't do that. But the point is this, after going up 9.5 or 10 points, it returned to test the open, okay? Today is Wednesday. Tuesday, here we go. A period is this box here, okay? So the market streaks down, looks like 10 or 11 points, more than that, 15 points. That's a 15-point wick here, streaks down here and then comes back up. Now the reason we know it goes down first is because it's a green bar. So here's the open, we go down 15 points. We come back and return to the open. We head up, we return to the open. We head up. So the first direction of trading is down and then we expand up. Now Monday it didn't do it. I'll go ahead and tell you, we don't need to look. Monday it just went straight down. We got like 4 points or something. It just went straight down all day. Okay, so there's one that didn't. Okay, here's a period. This is 11 points. I already checked that. So the market opens and we streak down 11 points. We come back to the open. We head up. We come back and test it. We head up. We come back and test it. So no verticality in this. Up, down, up, down. We trade up. We trade down. We trade up. We trade down. So in this 30-point range, we may have 70 or 80 points of true range to trade. Here we go. A period is in this box. Looks like we go up, we come down, create a low in B, retest the open, and go up. So we cycle down, expand up. Somebody's smart enough to figure out what this is going to mean in a bit. So A, here we go. This is, this is 11 points. I looked at this earlier. So we streak up, we go 11 points up, we come back, test the open, we cycle up, and we trade down. Now, we do go up and retest the open. It tried here and failed, tried here and failed. In a minute, we're going to look at something IBP 1.5 and 2. So there's another day. We return to the open. Here's a period. We go down. I'm going to, rather than guessing, I don't remember. We opened at 75. So 12 and a half. We got down 11 and a half points. We come back and test the open. We start down and trade up. We start up, come down, test the open. Here we go, the open. We go up, I don't know, about 03 to 27 points. We go up 27 points. We come down to test the open. Okay, y'all see, y'all, is that enough? Yeah, we can do this all the time because it almost never misses. Where the market will open, go in a certain direction, will return and test the open, and then cycle the other way. Okay, so that's pretty simple concept, but if you didn't know that that happened, would be like, oh, what's this thing doing, and that type of thing. So we know, let me see if I can get these lines off. So here's what we know. We know that the ES will trend in a given direction in the reverse to test the open 85, 6, 7% of the time. So we can trade both sides of range expansion. A 20-point day in the ES is not 20, but it's more like 40 or 50 due to the nature of the players are up and down, up and down, up and down, down and up, down and up, down and up. So we have multiple opportunities going both ways all day long to exploit this price action, but only for those that are in the know. Now, you can consider yourself one of those people that are in the know. So here's the key to the kingdom. Our task has been made super simple. We just determine the most likely direction of immediate range expansion, find a winning entry, trade it, continue to trade high probability trades in that direction, be on the lookout for ultimate trend identification system, give an indication that price action is likely to reverse. We've covered that in webinars and it's on our YouTube channel. Find winning entries in the new direction. Continue to trade high probability winning trades in that giving direction. Be on the lookout for ultimate trend identification system, give an indication that price is likely to reverse. Skip up to 2, find a winning entry. Continue to trade high probability. Be on the lookout for a reverse. Find winning trades in a new direction. Continue to trade. Look for a reverse. Skip to 2, and we cycle over and over and over all day long. Now, a blank slide for me means that I want to pull a chart over. So does anybody have any questions? It's a real simple concept. The market will clutter a bit right off the open, and then whichever side wins will take it a period of time. Almost 90% of the time, when that side is satisfied, we come back to the open. We typically, you can write this down, this is good stuff. We typically expand in the opposite direction of the initial move. So basically it's like, okay, they're trying to get you to think it's going up when the long-term deal is going to go down. But now that you know what it looks like, you can say, okay, this looks like it might be about through. We went down 15 points. We're starting to get reversals and buy signals. We're 12 or 13 points away from the open. We got like a 90% chance of headed there. Let's see if we can't trade that directional bias and take signals in that direction as it goes up to that 90% likelihood. Makes this so much easier. So here's some other things that we do. I'm going to be honest, in the beginning, I was going to do sort of like a new member orientation for you and just give you all of the things that happen in the Stock Index Trading Room. We have over 100 teaching pages, mostly by Rob, largest E-mini trader in the world. We have over 100 blog posts that talk about every conceivable concept in trading. This is free, included in a members area. We have countless videos about teaching signals and teaching these ideas. Take out of the open, defense of the open, things like that. So here's a good one. A period is 9:30 to 10 o'clock, 9:30 to 10 o'clock East Coast time. First 30 minutes. When that bar, 30-minute bar, gets violated or taken out, either up or down, in the next 30 minutes, 10 to 10:30, we will continue in the direction of this takeout for at least 2 more periods till 11:30. So if A is a certain range, and then B takes it out to the downside, we start to cycle. That's the direction that the large day trading accounts are going to favor. So a lot of times after 10 o'clock, the trading gets really, really nice because the initial range has been established and highs and lows have been established, and using those points for support or resistance for a trade on a day trading situation now becomes very, very real, and the large accounts are willing to enter. The large trading accounts, not the investment accounts, the large trading accounts are ready to come in to the fold. We have a table that has a probability to extend. We have a study that shows the percentage likelihood of the S extending before experiencing a reversal bar. Now, I thought about dressing this up, and don't worry about this. This is in the members area, and we can go through this. But let me show you basically what it. This is the only thing you'll need to know about this, is that there were about 22 or 300 bars that were studied for this study, 22 or 300. We can thank Rob Mitchell for doing that, and I think he had one of his members, a good friend of his, Mike, helped him to give credit where credit is due. But basically what we're looking for with this is that we're looking for an instance where we get a reversal bar, which is 2 points on our big chart, and one continuation, so there was no consideration for that. But what is the likelihood of getting a bar after that? It's about 94%. What is the likelihood of getting a bar after that? So this would be a 3-point winning trade for us, about 75%. 76 or 7. What is the likelihood of getting a bar? 1 bar is 4 ticks or 1 full point. So what is the likelihood if we get a reversal, a continuation, of getting 3 more bars? About 60%. Of getting 4 more bars? Yeah, we're getting close to a coin flip. The ES likes to move in 7 and 9 point chunks. So we get a reversal bar, and in 5 points, it's about 50-50. So when you see us do a recap and we say we like to capture 5 points on our trades, you'll understand why. Once we get started, we have even money chance of getting 5 points. It's pretty cool to know, in my opinion. And then as you go down the scale, you would think, okay, the odds get less and less and less. You know, and once you get, 8 or 9 bars without a reversal, I mean, you're getting very, very thin, rare air, okay? So we can tell you statistically over weeks, under certain circumstances, be on the lookout for 5 points. So when we're in the room and we say, okay, we're looking for 21 ticks on a certain move, this is why. It's because we have better than a 50-50 chance. Once it moves away, we're always going to be break even or better in this area. So we've got a 50-50 chance of getting 5 points from our entry. Just brilliant information to know when you trade. I think, yeah, I'm going to pull that back and make sure I'm through. I don't like all those lines. Probability extend. Oh, 30-minute super map. I don't have any idea how this is, but this is maybe the most impressive thing I've ever seen. And I'm going to break this down real quickly. We, with the super huge ranges, it's still unbelievably accurate. But let me show you what this says, and it's, well, in that 75 to, it's probably 80 or 85% accurate. So here's what the super map would say for this day, and I don't even know what day we're talking about. It was projecting 33.38 points in A period. 24 in B, 20 in C, 19 you can see, and that makes sense. You know, the ranges start to contract and then they start to expand. We know that. A and B together, A, B, and C together, B, C, and D, C, D, and E. So this is for 3 periods. We call this 3-period probability walk. But not only does it tell us what kind of range to expect, are we going to take out the prior, are we going to take out -1 of the period between 9 and 9:30, either up or down? 100% yes. Are we going to take out -2? 100% yes. Are we going to take out -3? 100% yes. The 80% 3-period probability walk tells us we have an 80% likelihood of going in a stair step, not to take it out here and take this one out here and take this one out, but it's a continuation. Anytime you see this number 8, 9, or 10, it's like, okay, man, we're going to continue with what's been going on. We're going to take out the previous period by 1, 2, and 3 points. Now, when we've got 40-point ranges, it's not as big a deal as when these numbers are 6, 7, and 8, and we have a 12-tick takeout. I mean, that's a huge trade in a small range day. And I'm gonna mention one other thing here. If you'll notice, we have the likelihood to continue 80%, 70%, 30%. What does that tell us? Tells us we're going to get a reversal in C. Hello, that's good to know. Probably, if we haven't already, probably what? We're going to get a reversal back to the open. Okay, so can you see how all of this comes together? Anthony, thank you for asking. There were hundreds of signals, so we just can't. I mean, it would take an hour and a half to go over everything. I appreciate you asking. There's just too much data. I'm going to show you a new trade and a new signal, and we'll go over a couple, but you know, we could spend an hour and a half going over today's chart. And of course, you know, we're not going to do that. Daily range targets, sometimes and this is top to bottom, bottom to top. We have a forecast, and we have had ranges of over 100 points projected and called within 3 or 4 points, and then the market reverses. It's accurate within 70% of the time. So we have all of this stuff that we use. Too much for some people. I'm gonna be honest with you. Some people get a little overwhelmed, and we would ask that you take one idea or one concept, trade back to the open. Trade ultimate trend identification system, find the direction the market's going to expand, get your favorite signal, and trade with the trend and range expansion and get you some big winners, and you'll be fine. Is there anything else? Oh, this one. What time is it? Yeah, we're good. We're good. The cliche trade. I don't know if Mr. Rogers is here from Tucker, Georgia. He came up with this name. I love it. It happens so often that we're shocked when we don't get it. To be honest with you, it's just like, huh? We're shocked when it didn't happen today. The market was it's been kind of stuck this week, to be honest with you, but we have done well. You saw that first indication that we suggested was a 7.5-point winner. We had a lot of members that took off after that, said, thanks, that's enough. And that's up to the trader. So anyway, initial balance period, the cliche trade. The first hour trading is referred to as initial balance period, or IBP, the high and the low. I'm going to show you what that looks like. Once that range gets established, there are some incredibly highly likely scenarios that can take place. And so the large accounts, large smart money, smart enough to stay out of the mix until you have a tradable winning edge. That's why after 10:15 or 10:30, the market often just gets brilliant to trade. Once a violation of this range has been established, the market will very often trade to a value of 50% of that range. If it's, say, a 20-point A and B period, then IBP 1.5 will be 10 points. We have had trades in the past couple of weeks that have been 45, 48 points that worked perfectly. And then we've had days when there have been 3 or 4 very small range days. IBP 1.5 will be 3.5 points, but it works just the same. It doesn't matter how big it is. So I want to pull this back up, and let's look and see what that looks like. So let me get out of this clutter here. I don't even know what day this is. Anyway, the lines on a chart are plotted by the free software. The open, this is half back, and if you don't know what that is, don't worry. If you come to the room, you will. And if you don't, you're missing out on a lot, but you can Google it. The green line is the IBP 1.5, up and down. The red dash dot dash lines are the initial balance period, and this is just simply 9:30 to 10:30, the low at 9:30 and the high at 10:30, right here and right here. So here we have a day that broke out, faked out, came back down. We love these because there's probably a 90% chance of getting down here, but we're not going to talk about that. Once we retested, watch this, team, pay attention. Please pay attention. This is not that hard. We traded up, trapped, expanded down. So here's IBP, here's 1.5, this green line, you can see from IBP to 1.5. And again, this is at 50% more. This is the full measure of here to here. Goes to here. Okay, so it's not that big of a deal. Here you can see our IBP. Let me take this off. Here's our IBP line. Actually, comes down. So actually this came down and set this and went up. Doesn't matter. Here's our IBP. Here's 1.5. So we get above, we start cycling above. You hit 1.5 up. So here's IBP, we get down, we start cycling down, we hit 1.5 down, we hit 2.0. Now this doesn't look like a ton on these charts, but these are 20, 22 point moves here. Okay, here's IBP low and high, here's a cycle above IBP high, here's 1, here's 1.5, and here's 2. So just like clockwork. Okay, the market trades down, traps people, returns to the open, expands up, 1.5 and 2.0. I know this gets boring, right? I know it gets boring. Okay. This is kind of a sloppy day. We come down and set it, come back up. We don't get up. We do go IBP to 1.5. Don't quite get to 2.0. And then I think, no, here we go. A opens, okay. We trade down, trap people, retest the open, thank you very much, above IBP 1.5 and 2.0, okay. Now, are you starting to see the patterns here, team? It happens daily, 85 to 90% of the days. That's a brilliant question. Unfortunately, it takes a bit of thinking to trade. It takes a bit of, is 2 points or 3 points, 5 points. Typically what we do will be, and this may have been a fake out, we got above, we look for cycles above, which is basically, it goes up, it tries to come down, it gets rejected, and it starts going up. Normally with a new breakout here, we're probably about 95% to get here. So some people will want, if I can't get those 3 points, I don't want those 18 points. We understand that. But no, we don't have a cut and dry number. I will tell you what it is. I'll tell you what it is based on. It's based on structure. It's based on the size of structure and what's the allowable range. We could use a super map. We've got a lot of tools to use that. But basically what we do is simply this. We get below and we start cycling down. We get normally 2 or 3 great signals to go from here to here. Do we sell this and put a stop 20 points up and that? You could. You would be very profitable. I don't know what that would be. You would probably have to find some key levels. It would be a way larger stop than we use in the room. We don't have to use very large stops. You can if you want to. Here's IBP, here's the cycle above, here's 1.5. So here's IBP, 1.5, 2.0, okay? So we go up, we trap people, we return to the open, we cycle down 1.5 and 2.0. That's it. That's it. I know I have been accused, and I've been accused of oversimplifying this. That's fine. Okay, our newest signal in a room, real simple. It took a while. I love failures. When I finally realized what was going on, I went, duh. It was like hit me right between the eyes. And we're about less than 10 minutes away from being through, probably 7 or 8 minutes away. Okay, it's a double up or double down. It's a local non-cycling double top or bottom is formed, and then we check for a type 2 divergence on smart momentum. And that's it. That's all there is. I'll show you what that looks like. It is our most powerful signal to date. Any double top or bottom that completes is a failure for specific move to finish. Well, if it fails, the other side is hammering it so hard, the likelihood of winning is not 100%, but it's nothing's 100%, but it's so close that it's like, really? It's just the insight into what's going on at double tops and bottoms are incredible. So I've actually got more than the past 10 to 8 days. I'm going to show you the trade on our room chart, and then I'm going to show you a recap for this month, all of this month, and then we're going to wrap up. We're going to be through. So double up. Now, I will tell you this, I think we had 3 today, and that's a lot. It doesn't trade a lot. We don't get this opportunity a lot. Somebody asked for signals. There's a type 2 divergent signal, but not much, 4 or 5 points. Here's the defense of the open that we talk about, right? We go up and we trap people, and then we range down. You've got to write that down, team. We go up, then we're going to go down. We're going to head down. Test the open. We're going to expand down 90% of the time. Okay. We call this defense of the open. It's also a TTOX, color on color with room to grow. That manifests under halfback. That signal right there is just too good. That's a laugher. And you see this big open zone that tells me a huge down move is coming. Okay. So we get a combo trade here. Boom, 7 or 8 points. And we get a little winner type 2 here. We could, trade that 4 or 5, trade that for a couple, trade that for a couple or 6 or whatever. But there's plenty right in there. Okay. Double up. I think the first one we had was up. Nope, first one we had was down for 4 points. Okay, so here's a double down. Now it's all there is to it. So we have this high and this high. And we point them out in the room all the time. I had an error on this before it formed in the room. We're also overdone with TTOX, and we've got a type 2. There's about 8 reasons to sell this right here. Now it goes to initial balance period and does this, and it often does that. When we get in this trade, we're hoping this doesn't hold, but we're managing a winning trade. But we have a high here, smart momentum goes up. giving us a deep cycle, telling us we're likely to go down. So we sell that, manage it, 1 point, 2 points, 5 points, 50 points, whatever your financial situations determine for you. Here's one. We have a small type 2. Doesn't matter the depth of these. Sometimes the small one is much better, but we have, you know, a blue bar, red bar, blue bar, no cycling, reversing in between. Smart momentum is in a lower position, type 2 divergence. This one manifests above half. Again, just it's too good. It's too good to ask for a signal that clear stops under halfback, and then it's going to go up. Right here, 5 points. That one was good for 5 points. Oh, good for you, Ken. Now, why did I don't know why I don't know why I put trade marker on this, because I've got another chart that I did for the month. This is just like a day or two. So what do we have? Non-cycling double bottom. Type 2 smart momentum. 5 points. Okay? That's it. And those were the three that we had today. The other highlights, somebody asked what you do. We had the defense of the open. We had that. That was a brilliant indication that we were headed down. And then we got on this one early. We said, hey, look, this red line's not going to be taken out that easy. And we've gone up. We're fixing to head down. Defense of the open. And then we're going to cycle down. So we're looking down, down, down. We're looking down all morning. Just, you know, for just what it does. The market does what it does. You know, and you can look all over the chart. You can find a sweet Batman here for 7 points. You can find this for a retag at 8 points. You know, there's stuff all over the chart. So let me pull this up right quick. And I'm going to mess with you a little bit. Yeah, we do have stop losses. We're going to talk about that. That's probably the most important question. You know, if you protect the downside, the upside takes care of itself. Okay, so from April, oh, that's not right. Hang on a second. Yeah, that's not right. Anyway, this is in the month of April, as of today. This trade signal that I just shared with you, double up, double down, has fired 27 times. And for 1 point, which is our first threshold, it's 27 out of 27, which it's like we have a lot of things that are in the mid 90s. So that's not, we look and we go, wow, it's a failure. So the 100% is like, yeah, that makes sense to go a point. But now we're using a 15 tick stop, which is the most profitable stop to date for all of our trades. We can test everything. This software, by the way, is brilliant. Chris Trent developed this. He was is a client of Rob's, and you can test. We'll show you how it works as we go through this. It's just unbelievable. Okay, so now all of the members and all of the people that have been with us for a while, hang on to your hat here, because I'm going to show you something that is exceptional. Okay, so people ask, what do you trade? What do we trade? We trade, the only thing that we're researching anymore in the room is we're researching money management, and then we'll use signals to be consistent with applying that money management. But I'm looking for a signal that win size is larger than the loss size with a better than 50% track record. Does that make sense? It's going to win more than it loses, and it's going to win larger than it loses. That's cool. We have that. Right. So we're going to add another contract, and you may not trade. You say, I don't want to trade two. That's fine. We're at 89% to get 2 points. So if you don't want to trade two, you probably don't want to take a point off of this. Probably want to let it go at least 2, because that's almost 90%. Okay, pretty cool. And then I put 16 here because I want it bigger than our stop. That's the only purpose of this third one, is what do I get if I want to take one tick more than I get. Now, this initial stop, of course, as it moves in our favor, we trail that some or not. It's up to the trader. Most people do. So this almost never gets hit. This 15 turns into about 9, an average of 8 or 9, just so you'll know. Okay, Steve, so you're telling me that we can go 81% of the time winners and take more than we give. And that's exactly, I've looked at this chart. I lost internet service. We were off Friday for Good Friday. So I studied, I've put a lot of work and preparation into this. And I kept looking and looking and I knew it was good because I'd been trading it for 2 or 3 weeks. And I hadn't lost any, and it was like, yeah, okay, it makes sense. It's a double top, double bottom. It's not going to lose with smart momentum giving us a continuation of cycling. So it's pretty much, we don't have locks and we don't have guarantees and we don't have sure things. It's pretty close. So I looked at all of this and I thought, well, this is incredible, but I know it's true because, like I said, I've been trading it. Okay, so what does it look like with a 10 tick stop? Dave, it would be you that would ask that, and I appreciate that. So normally we'll go down a couple of ticks, and these numbers get less. Huh, it didn't change. Take it down 2 more. Whoa, wait a minute. Whoa, 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 whoa. So Dave, here's the sweet spot. So in application, I'm trading this with it, and that doesn't matter. People are trading this with a 9 tick stop, expecting 2, 3. Yeah, we take this to see what 3 looks like. Almost 80% win percentage when I'm taking 3. And again, this 9, you know, if I'm going to 12 and it goes down 8, I'm not going to give it 16 to get the last 4. You know, common sense, just use common sense, team. And you can figure all that. Chris has written all of this in. You can trail it, you can break even stop, you can trail, you can set in all kinds of things and play with this for hours and hours and hours, and you do, and then all of a sudden you go, here's the key to the kingdom. Here, this is it. And this is it, team. So now we have a trade that just has exceptional internal numbers. And then let's think about it, okay? Smart momentum is brilliant in identifying. Today was so sloppy. See, still don't know how Rob figured this out, but he's just, that's our typical type 2 smart momentum trade. I'm sure we had a failure over here somewhere, ultimate trend identification system saying get long, and this is the type 2. We take winning trades in that direction. Remember, we take winner, 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 we get a reversal, we take winner, 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 we get a reversal, we take winner, winner, winner. We just follow the trend up and down, up and down, up and down, and have 85% confidence that we're going to be on the side of larger versus smaller moves, larger versus smaller. Now, we don't know if these are going to be 20 points and 14 points, or if they're going to be 12 and 5 or whatever. Just got to use some common sense. But here's the double up. This is a type 2. Here's a double up. So yeah, Darren, it is. And about 3 weeks ago, I was looking up with this. I'm going to tell a short story, and then we're going to be through. Started trading smart momentum after after a lot of years. After a lot of years, I finally went, oh, I get it. It makes sense. If I can do this, I promise you, team, y'all can do this. And I was watching Smart Momentum, and I'm looking at this. It's going like, you know, that's supposed to be an ABC down. Up, up, up. That's supposed to be an ABC down. And it's not. And Smart Momentum saying we're going to continue cycling up. And it fails to go down. Well, you know, the likelihood is it can't go down. It's got to go up. And there we go. And the numbers, you saw the numbers we get, they're crazy. So anyway, but again, it traded 3 times today, which is a lot. We've had in this month, we've had 3 days that we had none. So we use type 2 and TTOX color on color with room to grow in Batman's and Smart Prey, you know, all of the other arrows in the quiver. We are not a one-trick pony. It would be simpler if we were. Now, we rely on this signal a lot. This is our bread and butter. This is just the majority of, you know, can I get going with a likely direction of market growth? And we do 85% of the time with that. And then, you know, all this other stuff is ancillary fluff, if you would. Auto trade stuff doesn't work very well. To be honest with you, I've never seen one that feels, if anything can be, it can be, but it doesn't work very well. It's not hard to trade. But I don't, you know, to answer that, I've a long time ago tried with a couple of things, and you know, there were a lot of surprises, and they were more unpleasant than pleasant surprises. We don't ever miss these in a room. Trust me. I'm not shy about marking these out. So anyway, okay. That's it for the double up, double down. That's our newest signal. It is the most powerful to date, and we've got some good stuff. But thanks to Rob's brilliant tools and hundreds and thousands of hours of work, you know, we have stuff for you that you can be as successful, in my opinion, you can be as successful as you want. Benefits of the trading room, you can learn price action patterns like I just showed you, a part of your consciousness. You'll never have to think about it. You see it, you fire it, boom, and away it goes. You know, and after 15 or 20 winners in a row, you start laughing. You look at them and I'm going, oh boy, here it comes, and it doesn't form, and I get mad because I know it's such a brilliant signal. That happened 3 or 4 times today. I was waiting on one and it didn't form. But we're not going to let you miss those, and we're going to teach you how to do that. I spend 2 hours in the room each day teaching you how to find whatever it is that you want to find. And I spend hundreds of hours a month on return to the open, 3rd time's a charm, IBP 1.5. All of the other things that we're sharing with you for free, we'll show you in the room how it works. Trap trader oscillator, we have world-class traders. We have people that have traded with some icons of trading in the room. Trends and range expansion, we've talked about that. We want to be on the long side and not the short side of moves. Smart patterns trading system in thousands of hours. What everyone is saying about, yeah, we get good reviews. You can see why. I mean, you know, that was today. What I showed you was today. And it was a real sloppy day. And we had 8 or 10 just outstanding signals. We had a lot of margin. We probably had 70 marginal signals. So let's see, Rob, I'm done. That's it. I'm gonna turn this. I got a little lengthy here at the end, and I apologize, but 55 minutes is not bad. I'm going to turn this back over to you, Rob, if you're still here. I think you are.
I am. I'm just like, this is like the best webinar ever.
Oh, well, thank you. Thank you.
So, guys, these, and I'm just going to tell a real quick story and then we'll wrap this up. So, these things that Steve's showing you, this is the stuff that other traders can't see or that they don't know. It was about probably 1997 or so. I met this guy. He was an accountant, and he was he was doing what I came to later call market mapping. Almost, except for the signals themselves, the signals you trade, and you could use the signals that Steve teaches in the room, and not even have to know any of this stuff. But when you map the market, these things that, you know, probability to extend, you know, the super map that Steve showed you, and any number of these kinds of things, you know, these open retags, IBP tags, you know, all these kinds of things. These are all forms of mapping the market. But what we've done that's different is we've computed statistics on these kinds of things. So you know, you can kind of like piece these things together, and the market starts telling you a story, basically, is what it comes down to. Now, markets are fundamentally geometric. And if you look at these patterns, whether it be the signals that Steve's showing you or the mapping or anything else, the market is like a personality. It's like a geometry. And that geometry like has a certain personality to it. There's certain shapes associated with the movements that are behind it. And it will try its darndest to play out these mapping scenarios. So this guy showed me, he was actually taking the charts and he was printing out his charts at the end of the day onto transparencies. And then what he was doing was he was holding the transparencies that was scaled to his monitor. So he'll hold the transparencies up to the monitor and match the charts to the transparencies, and he would use that to tell him what the market was going to do. And I became obsessed with that, utterly obsessed with it. I was like, I was going to figure out market mapping. Well, what happened was, I developed that in a software version, so I didn't have to, because he was using Scotch tape and taping the things to his screen. But then that was, you know, back before we had really good computing power. And so I started coding that kind of thing. Well, then as things went on, and then, you know, various room members and things over the years started sharing little, you know, because I was teaching these kind of market mapping concepts, and people started saying, well, I wonder what, you know, if you did this. Oh, I wonder what would if you did this. You know, Steve, you know, compliments me, and thank you, Steve, you know, saying, you know, I'm not the smartest guy in the room. The smart ones over the years have been the members that just asked the questions, and then we went, whoa, well, I wonder what would happen if you did that. And then we do distributions on them and things like that. So it's cool. It's a kind of a language. Do you have to know everything Steve just showed you today? You don't. You just trade signals, you know. But when you've got a picture of what the of what's the market's trying to do and what it has a memory for doing to fulfill its natural geometry, you start having a much cooler kind of experience in knowing what the market's trying to say to you. Yeah, and so it's a real fun place to be, and I just love it. And you can tell by Steve's enthusiasm, he just loves it, and other people who have, you know, thanks guys for commenting on the things of people who are here that have experienced this kind of stuff. So that's what I have. Steve, thanks for sharing today. Everybody, thank you for coming in and sharing your afternoon with us and giving us an opportunity to show you a little bit about something that we're super passionate about. The trading room, stockindextradingroom.com. And I'd also put a link in there for the YouTube channel. If you want to get the recording for this, we'll post it as soon as we can. There's the link. Make sure and follow us there, yeah, so that you get the notifications when we post stuff. And then also, let me make sure that you have a link to the stock index trading room, which is this one right here. If you watch the video, Jean, you'll find a nice coupon there, and watch the video and get the coupon. Yeah. Yeah, if you, I always forget what it is. Isn't it like special member, or, oh, you put it in
is. No, I didn't. I will. Do you want me to?
Yeah, we've got a coupon code there that you can use, and I don't
That
know.
one works.
Yeah,
I know that one works.
special member, and it'll give you a nice discount. All right, guys, that's what we got for you today. Thank you for coming in and sharing your time with us and giving us the opportunity to share what we love with you. Thank you. Bye-bye.